Hey, this is Awais with OpenTrader, and this is the market outlook video for Wednesday, October 24th. Now, since our last video, which was shot Monday night, we see that the S&P has sold off down to the low 1400s, and this 1416 area is a key breakdown spot. We retested the lower end of it yesterday morning, and it was rejected. And then again this morning, we saw that we got responsive sellers at 1475, which was the overnight high and the value area high from Monday's session, or very close to it. We had 1415.5 as value area high. So we got responsive sellers active over there. 1405 was the value area low for Monday, and we had responsive buyers active towards the low end of the value area from Monday's session. Now, the key economic catalyst today is the FOMC announcement, which is out at 2:15 p.m. Eastern. And typically this results in a directional move. But given the current context, our expectation is that regardless of which direction the price moves on FOMC, we're probably going to get a reaction. What we mean by that is that if the S&P sells off on the FOMC announcement, we have some targets below at 1396.5 and 1390, and the expectation is that we'll get responsive buyers on first test of these levels for a bounce back into 1402 and potentially 1406 to 1407. On the upside, if we get a breakout, the expectation is that we'll be looking for responsive sellers to enter the market around 1421 to 1423 and then 1428 to 1430, and we'll get a pullback down to the low 1420s off of 1428, or if we get responsive sellers at 1421 to 23, we'll get a pullback down to 1414.75 to 1416.75, and then potentially lower from there back into this 1409 to 1410 area. So we're expecting a two-sided move on FOMC today. Again, the market can do anything at any time, so it's a matter of playing it as it unfolds. And as long as you're managing risk, these ideas should provide edge on first test. So, the main trade ideas, just to recap, is if we get a breakout, look to fade it 1421 to 1423, 1428 to 1430, and look to get about 5 points of edge on the first test. And if we get a breakdown, look to fade for 1390, 1396.5, and again, look to get 5 to 10 points of edge back into the prior range, and then see where it goes from there. But the overall context remains bearish below 1414.75 to 1416.75. That's a key breakdown spot, and as long as we're trading below it, sellers remain in control. Above it, the bias becomes a little more neutral, but overall the bias remains bearish below 1428, which is the heavy acceptance in the current range. So those are ideas heading into FOMC. Let's see how it plays out. I hope everyone trades well, and we'll review this in our next video.